Thank you so much
So
for
I
taking
wanted
time
to meet
to
you and
join
understand.
us today.
So basically, I wanted
So
to
maybe I'll
conduct
just
a few
start with a
interviews.
generic question. Can you tell us a little bit about the market landscape, the different players, the margins at each level, just a generic overview of the landscape?
So, first I'm assuming we're talking about agriculture as our topic for the day, so that everybody is on the same page when they're on this call. So, the way I look at Agritech, I actually classified into two buckets. It's important to separate the two. One is what I would call field agriculture, and that's your large scale commodities like grains, oil seeds, and so on. And the second is horticulture, and they follow very different sort of tracks. And it's important to understand that a lot of the activity that we're seeing in the market right now is around horticulture and less around field agriculture. Uh, a lot of the current brouhaha around the agricultural laws and all are more tied to field agriculture than they are to horticulture. So again, I just want to sort of separate the two because they are very different segments of the market, and the nature of the two businesses is also very different because most of the field agriculture products are typically non-perishables that have long-term storage capability. Horticulture, in most cases, not in all cases, but in most cases, is is perishables, and so that also has an impact in the way one has to sort of think about business models, right? So maybe I'll start with so on the field agri side. I won't go into numbers as much. Shruti, I think I'm assuming that everybody here has a lot more capability of doing research than I do. I've sort of stopped doing number research now. My research is more around finding people. So I am not as top on numbers. Uh, I just look for people that I think are building sort of large scale businesses and or have the capability of building large scale businesses. So just to give you an overall sense in terms of the size of the market. So uh, you know there are probably the argument would be there are about 100 million farmers in India right now, right? So take a give or take a few tens of millions here or there. Uh, Most of them would be in the field agriculture space, and most of them are subsistence farmers. So in many cases, these are people that are effectively just producing for their own consumption or for barter use in the local market. It's only when you get to some level of scale that you can start thinking about business models that get created around that. So so I'll take the example of say Sohan Lal, right? So Sohan Lal is a company in our portfolio that is playing in the field agriculture space. Sohan Lal starts by Sohan Lal plays at the post-harvest space, right? So now similarly there is a pre-harvest model as well. So you can actually be on the pre-harvest side where you're providing solutions around input credit. Uh, so this could be what Unnati, for example, could be doing with sugarcane, right? So they're playing in the pre-harvest space. There are other players like AgroStar that are also playing the pre-harvest space, where they provide the inputs as well as they provide the, uh, in many cases, the credit against those inputs. On the field agriculture or both agriculture, I would say both horticulture and this. If I look at the production side of starting from the production side, right? So as the farmer, what can you do for them? So there is the pre-harvest, there is the sort of growth period itself, and then the post-harvest. So in the pre-harvest, there is this whole area of inputs, and then there's agronomy. So agronomy is for example, what Bharat Agri is doing, right? So Bharat Agri is providing the technology for a farmer to, during the sort of production season, improve their yields or potentially, manage their crops better, reduce crop failures, and so on, right? So there is a lot of activity. Gramophone is working in this space. Others who are basically playing in the pre-harvest space and the agronomy space. And they are then sort of post the farmer production and the post-harvest phase. You start seeing companies like AgriBazaar, like Sohan Lal, like Dehat and others come into Farmart that are coming into the post-harvest space. So they are providing solutions that initially start with storage. So the biggest challenge that farmers obviously face is crops rotting or whatever else if they're not stored properly. So there have been solutions created around scientific storage, which improves the stability of the crop while it's in storage. So for example, one of the big challenges that you have in this is hygroscopic. So moisture gets captured in seeds, and so you have to make sure that there is continuous airing and so on to reduce that moisture content, because otherwise that leads to fungus and other issues, right? So scientific warehousing is a start. Now, if you're providing the warehousing, you can also, and if you have control over the produce that you have stored, then you can actually finance it, right? So in financing, there are two models that are currently prevalent. So almost all the storage companies, whether it is so at this point, I would say Arya, Sohanlal, AgriBazaar, almost everybody has an NBFC that they provide financing through. But they also provide what's called collateral management, because a majority of the financing of these crops is done by the banks. So the banks, because they have PSL, for this category, which they have to meet. So the banks actually provide loans at much lower cost of capital. So typically, most of the NBFCs would be providing loans at, say, 13 to 15%. A bank would provide a loan at 8%, because that actually, because it's part of the PSL requirement. So effectively, you don't see the NBFCs from these private players competing with the PSU banks on the large scale grains, right? So this is all being done, large scale grains, large scale oil seeds, and so on, is mostly done by the large banks. And what the storage players are doing is providing what's called commodity management services, right? So in the CM category, they charge a percentage of the value of the crop that is in storage with them. And banks are willing to pay that because in the past, banks have been cheated, because you stored grains in a particular warehouse which wasn't really controlled by you, and the grains would disappear. And so the bank was thinking, I have 100 crores worth of grain sitting in a warehouse in Nagpur, and they send somebody to go look at that warehouse, at the end of the month, and there is nothing there. And this, by the way, was a big problem that ICICI Bank had. They lost about 700 crores in that exercise. So after that, most of the banks are comfortable paying anywhere between 0.5% to 1% for commodity management services, this collateral management services. So many of these storage companies provide collateral management, and they, in many cases, also provide financing in areas where banks are either the limit has been reached with a particular client with banks or whatever else. There could be multiple reasons why banks may not want to fund the crop, and these NBFCs then play a role, right? Beyond the storage and collateral management and financing, the other area that a lot of these companies are getting into is market linkage. So if you are playing at the end spectrum of the post-harvest, obviously, it would make sense for you to connect with the buyers of these commodities. So many of these companies have also created a model where they do procurement services on behalf of large commodity consumers. So this could be, in the good old days was Ruchi Soya, but it could be, any of the oil companies. It could be, like, for example, Adani. So Adani will procure directly at times, but in most cases, they're procuring through these companies, like through a Arya, through a Sohanlal, through a Agri Bazaar, and so on, that are then in turn working with farmers at the ground level, right? So and typically in those models, Adani would pay a procurement fee for this procurement. It just sort of saves them time. It gives them guaranteed procurement and so on. So they're willing to pay a fee. Uh, sometimes those fees are in the form of, could be a truck-based, charge, depending on what commodity is being transported. It could be on the basis of, the number of bags that are transported, or in many cases, it could be on the basis of weight of the crop that is procured. So that is, broadly what one is seeing in the sort of field agriculture space at this point. Companies have tried various models, but it's still very much, it's tech enabled, but it's very early in the sort of technology deployment in this space. It's typically a lower value segment compared to horticulture. So the volumes are much higher, but the value is much lower. So for that reason, it's typically, the largest player in the space still remains the government. So FCI, NAFED, all the large sort of government bodies that are procuring from the market, also providing the financing through the government and through government banks and so on. So the largest player remains the government, and therefore, because of that, the government has sort of created an artificial ceiling on the value you can capture. And this is where the farm laws were trying to address the issue, right? So you were trying to sort of get out of this notion of the mandi being the primary point of sourcing. And the challenge with mandis, obviously, is the mandis are charging a fee, and that fee is typically going to the state government, and that, the state government, Punjab being an interesting example, those fees become a very important part of how the state government in then functions with other sort of solutions. So there is actually a very in some ways an ecosystem that will be very hard to crack for private players. So the one question, Shruti, that you asked is, why haven't we seen large exits in this space, right? One of the reasons why the large exits haven't happened so far is the government has played a significant role in capping the value that you can capture from this segment. And so even though you can create volumes, as soon as you create volumes, the government has created regulatory restrictions. So for example, the Essential Commodities Act, one of the value of removing that. So ECA, one of the laws was actually to remove the ECA. And the reason why that was being done is the Essential Commodities Act is actually a very draconian act when it comes to private agricultural sort of players like a Sohanlal or a Arya or anybody playing this space. And the reason for that is the ECA allows the government, or allows sort of the administration, to put you behind bars for warehousing. So if you are warehousing for multiple clients in one location, and it exceeds the quantity that is allowed to be stored on behalf of any one party, right? You become that party. So you're not seen as being a party of 10 clients that are storing at your warehouse. You can actually be put behind bars because you just happen to store 100 tons of grain when only 25 tons are allowed, let's say, right? So what that does, it becomes a huge issue from a compliance standpoint, from an ongoing business standpoint for many of these companies. So, at different points in time, when you see inflation creep up and the government bringing the ECA as a means to sort of reduce the inflationary pressure, these companies are the first one that get hit. So this has been a big problem in terms of these companies scaling up. It'll change, even though the farm laws have been repealed, one believes that the ECA will be managed more carefully now, and so we shouldn't see as much of the. But again, it's a very state by state implementation, and it's actually a district by district. So we, for example, at Sohanlal had a district collector in Ratnagiri that came and sealed our warehouse, saying you guys are foul of the ECA Act, and I'm sealing this, and the warehouse manager is going to go to jail. I said, here's a list of 20 clients that we have, and this is who we are storing on behalf of. Yes, you solve this problem with the judge. I'm going to take, so you deal with this with the judge, right? So these are kind of issues that one is hoping that over time, they'll go away. But it's as I said, it's a district level issue and hard to manage at times. So I'm switching gears a little bit now and talking about. Sorry, just one more thing on the field side, right? So the field agriculture side, there is also opportunity to bring in precision farming. Now, again, as I mentioned, there is this whole issue of value versus volume. So typically, you haven't seen a big deployment of smart farming in India because of that. The land holdings aren't large enough. In the US, typically a farmer would own 1,000 acres, right? Here, you're working with 2 acres, 5 acres, and so on. To expect that person to put in a smart farming system, which helps him, with better, irrigation, which provides him, so precision seeding, which allows all of that stuff. Is still there is stuff happening, but it is not as lucrative. So companies are trying to do it. Many companies are getting into soil testing. There's a company I saw recently called Krishi Tantra that's trying to do soil testing. Others that have tried to build solutions there. But again, the challenge there is, given the land holdings, the ability to pay is limits the size of the market in some ways. The more interesting play that we're seeing in all these areas is in the horticulture space. So the horticulture space is where, in the field agriculture space, it is happening, but it's happening in cash crops, where the value is higher. So, for example, tobacco would see this, right? Some of the oil seeds that are high priced will see this, but on the typical large scale commodities, even paddy, paddy can actually benefit a lot from precision agriculture, but it won't happen in the near term because the costs versus the advantages are still relatively low. And so, if anything happens, it'll be in the sustainability domain and less in the commercial domain. Now, in the case of horticulture, it's a very different play, right? The value to volume is much higher. So a lot more is happening in that space, and that's where you're seeing companies scale. So a Waycool, even a Dehat, NinjaCart, in its earlier avatar, they were all focused on the horticulture space and really trying to improve the supply chain there. So both in terms of the value at the field level in the grower, as well as the value in the supply chain, there is a greater impact one can have with horticulture. So horticulture basically has 4 categories, right? It's fruits, it's vegetables, it's spices, what am I saying, and flowers. So there are four big buckets in horticulture. Horticulture as a total market in India is about, I think, close to $2 trillion. So it's a large market. India is the second largest producer of fruits and vegetables. So it's a market worth targeting, and that's where you're seeing money go in right now. And again, if I take the same play and say, okay, there's pre-harvest, there's the growth period, and then there's post-harvest, you're seeing companies in each of these areas emerge. Right. So pre-harvest again. It's the model is very similar. The models in terms of, okay, there's input credit, there is input advisory, there is agronomy along the growth period. Post-harvest is different, again, because these are typically not, because these are perishable in most cases. So outside of spices, most of the stuff is perishable. So it has to go through the supply chain and get consumed within a certain time frame. So that there's a big difference on the post-harvest side. So on the post-harvest side, supply chain becomes the big play in horticulture. And that is where you have seen all the, whether it's Dehat, whether it's Cool, whether it is Ninja Cart, whether, other players who are actually playing on that side. Horticulture, you can easily see margins of, I would say, 45% that you can sort of squeeze out from the supply chain. So that's where the effort is going right now, is that 45% that exists in that sort of network right now. How do you capture that? And also reduce wastage. So this is 45% is without wastage, right? So wastage is another 30%. So if you take 30% is basically entire 30%, because that's 100% gone. So that's 30% plus 45% of the remaining that you have available, right? So it's a pretty large sort of market to go after. So if I look at that space today, you have everything from sort of in the pre-harvest side, advisory is telling you what to grow. So it's starting with, okay, here are models which will allow you to say onions are what you should grow this year. It was a bad year last year because too much was grown and prices crashed. But guess what? Because of that, 80% of your friends are not growing onions this year. You should grow it because this is going to be a year of low production. So it's sort of that machine learning and that AI and intelligence and everything else. Now, how do you do that, right? You obviously have to have satellite images, and you have to sort of see what is being sown and stuff like that, right? So it starts all the way from saying, okay, what is to be sown based on what you're seeing in the marketplace, and then subsequently, obviously, then you go into the whole agronomy space, which again is, in the case of horticulture, is a lot more lucrative. Farmers are seeing value. There has been consistent, value that as companies have sort of focused on different verticals. So, for example, again, you guys will know this Madhukar better, right? I think Bharat at least focus on the pomegranate belt in Maharashtra, right?
Yeah.
Now they have gone and shown that this works. And once you show that it works, farmers are willing to pay because the value that they capture is a lot more, right? So they'll pay 600 rupees for a season if they think they can make 6,000 rupees out of it, right? So the farmer is so one thing that's very interesting is the farmer is probably the most commercial. So you may think that they are the right? But they are the most commercially savvy people because they literally live on a day-to-day basis. So for them, every rupee matters. And so it's a community that is very, very susceptible to word of mouth. It is a community that is always looking for improvements, provided that they are proven. It is once you build a trust, it is a very, very sticky community. I'll give you the example. When I was doing diligence for Suminter, right? So Suminter is an organic exports company that we invested in, 14 years back, right? The company has when I invested, we were doing 3 crores in revenue. This year we'll do 1,500 crores in revenue, right? So the company has just grown over the last 15 years. Now, the reason why they've grown is once a farmer comes onto the Suminter platform, they don't leave. And this is something that we discovered when we made the investment, that when we went and did the diligence with the farmers, I asked the question, I said, today we are paying X. Tomorrow somebody comes and gives you 10% more. Why would you continue to sell to Suminter? Why would you not go somewhere else? The interesting point that the guy made and this is not just one, multiple people made this point, but the point that they made was, Sumintar has paid me consistently for the last 2 years. If the next guy that comes in gives me 10% more, I don't know where he's getting the 10% from. Most likely he's just trying to lure me, and the second year he won't pay me. So this notion of trust at the agri level is very, very important. And if you're sort of backing a founding team, that's one thing you need to understand is, have they thought through that, and how are they going to build that trust, right? I think Sai and the co-founder, right, they've done a terrific job. That's one thing that you can track, and the same sort of cohort analysis that you do in other sectors, I think the same cohort analysis apply for this sector as well. Very important. If you start seeing, drop-offs here, means this company will not be able to scale, because a farmer that is unhappy will tell everybody in the village. And if it raises a seed of doubt in the mind of the other villagers, even if one guy has done well, it'll be tough for you to convince. The frequency of delivery in this space is very important. So going back to the horticulture, so in the horticulture space, we are starting to see more and more companies emerge that are playing effectively a full stack game, right? Saying, we will provide you market linkage, and we will then we will help you with everything else in the process. And that is one thing that, again, I would sort of, one thing I've seen over the years is the best way to build a business, at least a scalable business in the agri space in India, is a full stack. Because the farmer community is more likely to listen to you if you are providing them the procurement service. If you're basically saying, I'll take the produce off of your hands at the end of the season on a consistent basis at a fair price, they will work with you on the entire sort of imports, growing, everything else. If you only come in with a pure sort of, okay, I'm going to provide you agronomy product, it is a much harder sell. So what I've seen now is, even the guys who've gotten into the business saying, okay, we'll do agronomy only, have actually gone into market linkage. Gramophone is a great example of that, right? Gramophone, when I looked at them initially, was focused only on providing a SaaS platform for input retailers. Then they went into agronomy. Then they went into market linkage, right? So I think everybody is going there that way. You look at Absolute Foods, right? So Agam only sort of got to the thing after he got the Absolute Foods model working. He done everything else, right? He built the farm technology. He built the vertical farming technology and everything else. But it was only after understanding how the end product would sell, how it would work, what the procurement would be, and so on, that he was able to create the end-to-end sort of solution, right? So I think understanding market linkage and potentially providing market linkage is very important in this space. And that's where we're seeing companies scale, right? So the Waycools and the Sumintars of the world have scaled, because ultimately they are the final sort of procurer and connecting to the market. So I'll stop here. My monologue is sort of, I'll sort of now answer any questions.
So Sandeep, go ahead, Sai. I'll ask later.
Just one question on the post-harvest side. Like the general problem, everybody knows, their profile layer of traders, 30-40% margin. So in that space, with the post-harvest, from the farmer to the end retailer or the B2B channel, what kind of B2B model would you think would work? Like, will it be asset light, or like a beecher, or full on-ground heavy, like multiple other players have done? And also the second part, what's the right way to approach that marketplace? Should it be from the farmer side, or should it be from the end, like the RT or the retailer side backwards?
Yeah. So I think, to answer your question, I don't think there's a single model that needs to be developed, right? You can sort of say, okay, I have found so BJAC said, okay, the problem is solving. I'm going to solve the problem for the small trader, right? They lack financing, they lack digital tools, they lack connectivity to larger buyers and so on. If I solve that problem for them and I make them more productive, I'm effectively indirectly capturing the market, right? So again, it's a market. So interestingly, BJAC is a market linkage play because they're effectively addressing the farmer issue, but they're addressing it through the RTR. Right now, I can say it's it's a similar model that they had created with the VLE, right? The VLE typically will end up being the local RTR anyways. Again, he or she has been given a model where storage is maybe more scientific, has more access to capital, has a easier way to sort of sell the product on, and so on. So again, very similar. Again, technology deployment, understanding of what it might be at a Unilever or at a Cargill or at a or whatever else. So it's just providing, it's removing information asymmetry, right? So that is a big focus area in the supply chain right now, right? The problem that Ninja Cart was trying to do was to address this issue in the horticulture space, right? That you don't know where the potatoes are needed and where the potatoes are, right? So if I can actually create that network to do it, it becomes potentially attractive, right? Now, the question that arises is how much capital are you willing to deploy against it? Because the value of the Arab, the value of the trading ecosystem is the capital that is available with them right now. So if you are going in and you're going to say, okay, I'm going to take the entire margin and try and get to the farmer. And today people are making that argument more and more because they are using this sort of thing that because the FPOs are there, I now have an aggregated farmer community that I can go and tap into. Yes and no. I you probably read this article recently, right? FPOs, there are very few highly functioning FPOs today, right? So FPOs also need a lot of hand-holding. So there could be a company created around making FPOs more productive. Now, again, think about the FPO as a sort of network of farmers. Typically, the Arat is one of the larger farmers in that community. So even if you're working with the FPOs, you will end up working with the farmer. So it's in some ways, I think wishing away that Arat or the trader is a fool's errand at scale. I think they will have a role to play. You have to figure out how you will bring them into your ecosystem. Dehad has called them VLEs and brought them into the ecosystem. BJAC obviously is targeting them directly. Farmart is using the input retailer as a means to act as that Arat, right? So there are different models that people are saying, but everybody is saying that there is a influencer and a financier in the local market that I need to work with.
Today, you might see there is a value of each segment. Say 10 years down the line, if I see the value change, like I see consolidation in each layer are doing like much lower people and doing 10 times the volume.
Mm-hmm.
So like that's how I visualize personally 10 years down the line. So I'm saying which kind of business model would be best able to capture that scale to enable the transition to that value chain. That was the basic.
So basically, what are each of these companies doing at the end of the day? They're collecting data, right? And what that data is allowing you to do is understand this information asymmetry between demand and supply. Like now it is up to you to say how much of that will I take on my books over time to capture the margin. Right? So Vikul is saying I'm going to take it all on my books and I'm going to capture the margin. So it's a question of, at some stage, if you choose, you can say, okay, I understand this supply chain for potatoes well enough, or I understand the supply chain for tomatoes well enough, or whatever else, right? Now I'm, instead of working through I'm going to go direct to the farmer and create a contract farming model with them. I'm going to go and build a Suminter in the tomatoes, and those will emerge. My view is those will emerge. Vasco tried to do this probably too early in the journey, right?
Yeah. That's it from my end.
Sandeep, if you look at the market right now, most of the investment, and that's where everyone is interested in, is happening on business models which are at this point in time more or less doing trading, right? So basically they are buying from, somebody is claiming to buy from Malatya, somebody is calling it something else, but at the end of the day there is an aggregator at the village level from where the procurement is happening, and then it is being sold to larger players. Sometimes it is even sold in mandi, right? And there is a lot of volume and there is a lot of capital. So but do you think that what will be the differentiator between all these companies, right? So 3 years or 5 years from today, what will differentiate a Pharma, a Gramophone, a Dehat, Agrostar also? I think that you should add in in the list. They have also started doing procurement side, right? So they are also getting it.
Yep.
So how will they differentiate among themselves, and or is it going to be a similar party like what consumers have in Taiwan, India, with Flipkart, Amazon, and now Meesho coming in it? So we'll have periods of discount. Similarly, farmers getting more for their produce and getting pampered for a long period of time. What do you see? How is it going to pan out?
Interestingly, because the farmers haven't really benefited as much as one would imagine with the new models. So yes, you can argue that Ninja Card may be paying ₹2 more or whatever else, but that hasn't really sort of scaled, right? So if you look at the overall market, the startup players are still a minuscule part of what the farmer is, right? So in some ways, the tech-led models are actually having a greater impact than the procurement-led models right now. I'll just give you, so for example, we have a company, Intello Labs, in our portfolio, right? So Intello has built a exchange platform for, at this point, 3 commodities, right? They have an exchange for cardamom, they have an exchange for onions, and they have an exchange for apples. Right? So these are 3 that they have built. They will eventually have it for across about 25-30 commodities, and it is allowing people to come in, assay the quality, and then define a price and buy on that price sight unseen. So I don't need to be in a particular geography to be able to purchase a product. I can take a photograph that gets uploaded, quality gets defined, quantity gets defined, and a purchase happens, right? They are what they are discovering is that most of these players. So I asked them, I said, why doesn't Dehat procure everything on your platform? Milan's over there, Sandeep, in cardamom, I'm doing $2 million of trade a day, right? So $700 million of trade of cardamom is happening. These guys are minuscule, right? At the end of the day, Vipul's procurement across multiple commodities is probably at this point what, 100 million?
Maybe, yeah.
Maybe, right? So my point is, in a single commodity, they're doing 5 million, 6 million procurement. In a market which is doing, an Apple market would be a $1 billion market. So that's the issue that you are seeing, is that this is still very early. And the question that will emerge is, can these guys, create a brand on the front end to be able to capture the margin that allows them to take the cost that they're taking right now in building the infrastructure.
Okay.
So the asset-light model, in my view, is potentially more likely to succeed. But the challenge over there is how do you ensure quality in asset-light model? So how do you build the technology? How do you build the incentives? How do you create the, now today if Dehat does a great job with the VLEs, you can think of all the VLEs as effectively employees of Dehat. Today they are not. Today they are effectively franchisees, right? But I can say, okay, at some point I can bring them all into a central company, make them employees, give them some equity, do whatever way to bring them all in, and all of a sudden Dehat becomes a very large company.
Yeah. But how large has any company has been with respect to franchisees, right? So at the end of the day, it will not be as large as that technology companies have been, right? So technology, the advantage is that it can have infinite nodes, right? And over here, even a Dehat or any company will at the end of the day have a limitation, right? So how many points you can control, how many employees you can have, and the management of those employees.
Here's how to think about this, right? If I were to sort of point you to a space where there is a full stack model that is sort of working right now, where large companies have been created, it's actually in the area of basmati rice. It's in the area of soybean oil, right? It's in the area of what fortune, right? For example, what Adani has created, right? There are agricultural produce companies that are building out an end solution, end product, and capturing margin all the way from consumer down. So at some stage, all these companies will have to think about how will they, particularly in the Indian context, would they have to think about a market linkage in the area in which they are playing,
and go to the full value extraction as high as becoming a processor and having a own brand.
Potentially.
Yeah, that makes more sense.
Yeah. So it's the data that you're collecting, it's the understanding of that business to the point of saying, okay, now I'm going to go and build a solution for the consumer, right? Now, it's interesting, right? So let's take Unnati, for example, right? So I don't know how many of you are familiar with Unnati. So Unnati is this company that got started out in Western UP. And the reason why it sort of succeeded is because in UP, Bihar, in sort of the northern belt, actually I think even in Maharashtra, so wherever there's sugarcane grown, there is a cane commissioner. And the cane commissioner defines that this particular mill will have these farmers supplying to it. So the farmer can't supply to anywhere else other than that mill. And the price gets defined by the cane commissioner. All of that stuff is sort of defined. So it's a very controlled market. Now the challenge that the mills were facing is they were struggling to do agri-extension services for their farmers. This guy Ashok Prasad, who's the founder of Unnati, came in and he actually built a solution for these mills. And the mills were effectively his market linkage, right? That's the procurement. So all the farmers were willing to work with him and bring his agronomy, bring his inputs and everything else, because they knew at the end of the day, he was working on behalf of the mill. And so he did this deal with the mills where he said, okay, whatever value I'm capturing in between is mine. And the mills didn't care because the mills were looking at agri extension as a cost that they would have to bear. So now all of a sudden the cost is taken away. He's doing it quote unquote free for the mill, but by structuring his supply chain, by structuring his contracts with the input suppliers and so on, he was extracting the value in between and effectively took control of a large portion of the sugarcane belt in Western UP, in Bihar and so on, right? Now, he's sort of looking to do the same thing in other areas where there are large contractual purchasers. Could be oil seeds, could be potatoes, and so on, right? That model has been defined.
Yeah. To a large extent, that's what ITC did with their
That
uh,
each file model, right?
each of all model, right? Yeah, yeah. I think we should open the forum for questions. Anybody has any questions, they can ask. We
No,
are
there's
like,
one question that Shruti had asked that I want to talk a little bit about, right? So what can kids ask? What can deep tech and AI do? And other examples. So I actually think that there is a lot of potential in AI, ML in the Indian sort of agri space. It'll take time to develop. It is where I think these full stack models will actually create value in the long run. But just taking an example of Intello again, right? So Intello spent the first 4 or 5 years of its existence actually perfecting computer vision for assaying quality, right? So a lot of work got done in terms of understanding what are the different uh, uh, problems that exist for different types of horticultural produce, and then being able to look at that real time when you are inputting produce from farmers. And today they can with reasonable confidence look at a photograph and say this is the quality of this and this is what the price should be, right? Now that was a starting point, but again, how do you capture that value, right? How do you A farmer will not pay you for assaying their crop, right? There's no they don't see any value unless somebody buys it, right? So a farmer will not pay for that. But now if I put that quality on a marketplace and I say, okay, this is the quality of this onion in Nasik, would you buy it sitting in Chennai at a particular price, right? And all of a sudden now I open the price discovery for this particular farmer because of the fact that I've given quality and quantity. The farmer is then willing to pay a certain percentage if he can get a better price. So initially in the first few trades, you don't charge them, they see a better price. Then you go back and say, oh, by the way, did you see your price improve by 10%? Now you give me 2% of the trades. He'll happily give it to you, right? So that model is what is emerging in terms of that data capture, AI, ML sort of working, right? This will apply even for full stack models. If you look at a Dehat, they'll capture data, Abhijak will capture data, everybody will capture data. And with that data, they will be able to then take a call on what value chain, what supply chain part can they capture with their own capital rather than using third-party franchisees.
Got it. Thanks, Sandeep. I think maybe we'll just open up for Q&A. Guys, any questions? We still have around 7 minutes to go.
Sandeep, one question I had, which is more, I think, fintech than agri. The pilferage that you mentioned, the ICICI case of 700 CR being lost. Any interesting models or any interesting solutions that you are seeing that are solving for this? Maybe both like solving the pilferage bit, solving for TG access, so on and so forth.
Yes, I think the biggest thing that's happened there is the warehouse act that came in, WD Act. So what it did was it actually created this concept of accredited warehouses, and the banks are now more and more working with people that come from this sort of thing and are working with accredited warehouses and are willing to pay the commodity the collateral management fee, right? So that model is becoming very, very common, and we are actually seeing at Sohanlal, for example, that banks are comfortable paying that half to 1%, and even though you could argue that they may have even worked with a particular sort of area in India where they haven't seen problems in the past, so there is no reason for them to go towards a CM model, but they are doing it just because it's standardizing their collateral management and their risk management procedures. So the NBFC thing that I described to you, there is in agri in particular, NBFCs remain a little bit of a challenge because of the sort of PSL impact that the public sector banks play. very few private sector banks in this space. Most of the private sector banks are playing, if they have to do PSL, they obviously have to do, they play in this space a little bit. They typically will buy portfolios rather than create portfolios. And that's where NBFCs can come in, is they actually act as a sort of partner to these, private sector banks to say, okay, I'll do the sourcing for you. You give me, and then I'll sort of sell you that portfolio at whatever the 8-10%, and I'll keep the 3 to 5% in between.
Understood. Thank you.
Any other questions?
Just on the fintech piece, where do you think is the larger opportunity? Is it on the post-harvest or pre-harvest? Like, because post-harvest you can deal with larger checks to traders, like rather, and pre-harvest would be more granular. Like, which would be an easy way to solve, say, somebody coming up,
Yeah.
enabling PSU, FLDGs, like on one end, like a Rupeek did for gold loan, right? Using CSB bank balance sheet. Like, where do you think is the right
I think the
segment?
opportunity is more on the post-harvest side, to be honest, right? Both on the because on the sort of commodities grain side, you have the ability to store and therefore have, as you get better and better understanding of pricing trends, you can manage your collateral risk better. Outside of the PSL activity, there is obviously loans that you could give to small processors that are storing commodities in your warehouses. Also on the horticulture side, there is actually a reasonable amount of opportunity to provide credit through the supply chain piece, right? I would say right now the post-harvest market is bigger and also less risky in some ways. You end up having larger control over the commodity that you are financing.
Understood.
Plus, smaller farmers are political risk also, right? So you don't want to lend to farmers directly. There's too much risk involved.
So Sandeep, one question on the horticulture piece, because you mentioned that there are different business models which is tending towards doing market linkages. How do you see the company's position, whether themselves doing multiple crops and SKUs or position more towards a few set of SKUs so that they have more controllability, like be on the precision agriculture or agronomy, or handling QC and other aspects, price discovery and other aspects? How do you see companies positioning themselves on the crop or the number of SKUs in the horticulture space?
Yeah, I think the right approach is to be crop specific and really get a strong understanding of one or two, three crops at most. The challenge that companies run into is obviously, if you're in a particular region, the farmer may be growing multiple crops, right? So you have to support, if you are their procurement partner, and you can't say, okay, I'll only procure crop X from you and not crop Y, right? So many companies end up getting into multiple crops for that reason, because they want to be the sole procurement for that region, let's say. As I was mentioning, that for example, Bharat Agri has been able to say focus only on pomegranate because they chose a area where the primary crop was pomegranate. We've seen, for example, again with Intello, we focused on cardamom in Kerala and sort of Western Tamil Nadu. But interestingly, what we are discovering is that the same farmer is growing black pepper. So although we Yeah. So what I was saying was that it is, in the agri space, if you're serving the farmer, and many companies sort of
Sandeep, your screen is frozen. I think we lost you for the last 10 seconds.
yeah, my internet is a little unstable. Is it better now?
Yeah, this is it.
Okay. Yeah. So what I was saying was that the challenge is the farmers are producing stuff, and once they see you as their procurement partner, they want you to procure. They want you to procure everything from them. So it sort of forces you to also start having to find demand for products that you may not be specialized at. This is one of the issues, I think, that I don't know the sort of extreme details. I think this is one of the issues that Ninja Cart faced. So they ended up having to procure things and sell them into the Horeca market at losses. They ended up having to procure, and stuff was wasted. So they had high wastage rates and so on, partly because of this, right? That the farmers basically said that if you want me to sell you the main crop, which could be, say, tomatoes, you have to buy everything else from me. So buy the okra, or buy the brinjal or whatever else that you're, and then sell it.
Thanks, Sandeep. I think we've just run out of time. Guys, any questions?
Yeah.
Anything else? Maybe we can just take a couple of minutes of Sandeep's time.
Great. Thanks for having me.
Thanks for taking time to do this, Sandeep. Always helps to hear from people who've looked at the space for long, especially when we start looking at agri. It's a very complicated space with different intricacies. So this was very helpful. Thank you so much for taking time to do this.
Okay, great. Good talking to everyone. Take care. And Happy New Year, everyone. Bye.